So more recently, obviously, clearly, Reddit had a significant impact for the short term, extreme short term in the marketplace. Do you see like potentially a with the internet availability and trading organizations and e-trades and Robinhoods and all that, has there been like a significant change going back to when all this GameStop stuff happened?
Well, here's what happened. Okay, and I'm going to sound like some old codger that's going to be like, these sons of bitches. We used to trade in fractions. Stocks were quoted in fractions, and they went to decimal, and they went to penny spreads. And what that allowed technology to it allowed people to develop technology to take advantage of different situations. It allowed people to trade and have less risk. If I'm going to trade a stock and it moves in eighths, which is 12.5 cents for those of you at home, I'm going to have a lot more risk buying 10,000 shares than I am if it moves in a penny.
Right.
So what that has done is it's incentivized more trading volume and to develop more ways of making money and trading.
Day trader.
David, yeah. Well, yeah, but like on an algorithmic style, quantitative style. The markets have been taken over by quantitative money that's traded. Now, what's going on here now is that because Robinhood came out and it's called payment for order flow. Okay. And that's been going on for a long time. I worked at one of the biggest payment for order flow shops during the internet boom ever. And we paid every broker dealer. They're a broker dealer, so we paid them for order flow to get their order flow. And like everything else in the world, if I'm going to pay for something, if I'm going to pay you as the client to come to me, that means I'm making a shitload of money.
Yeah.
I'm paying you a penny, I'm making a dime, right? So in the Robinhood world now, they went to zero commissions because everybody paid them for their order flow. So their incentive was to create an environment to allow you and I or 18-year-old kids to just trade off this fucking thing like they're ordering a pizza, and people then will be able to capitalize on that. And what the Reddit thing and what they're going to find out and what they found out already is that there were professionals behind that Reddit thing.
Yep.
And it was only to take advantage of one situation, which was GameStop. GameStop had a short interest on it that was an anomaly again and higher than normal. Melvin Capital was involved, and somebody said, short squeezes have been going on, by the way, since the beginning of time, the beginning of Wall Street. Piggly Wiggly, which it's got to be in one of your states, right?
They're huge.
Was I love Piggly Wiggly in South Carolina. Was a short squeeze in like 1927, and a short squeeze is basically when they force shorts to cover, and when they are forced to cover, they cover ugly. Like, oh well, let's buy it here. No, you got to cover by this time. You have capital. So the Reddit thing was they were able to capitalize on one situation on the GameStop. And then what they realized is that, man, we have whoever did it realized somebody was able to move it because the Reddit thing was going on since November. The chat was going on in that site. I mean, Melvin Capital had a fantastic 2020, an unbelievable 2020. Those fucking traders, I hope they got paid. I hope all those guys got paid before the end of the year. That fuck. So
no shit. ain't no money to pay him now.
No. And so what they realized was, man, we were able to do this with GameStop. Why don't we try this with some of the beat down? Nokia has been one of these stocks that's traded in that range forever. AMC, and that's what happened. The real shitstorm happened when American Airlines was up 50% pre-open after earnings. That's when people said, wait a fucking minute. Like this has got to stop. And they're going to find out, they're going to prove, because the markets are very transparent when it comes to these things, especially the options market.
Can you break that down for us? Because I have no idea what you just said.
Transparent?
Anything,
basically
anything
words you used in the last 6 minutes.
So everything, the SEC which is the Securities and Exchange Commission, FINRA, which is the governing body of the market. When you trade a stock, there's a record like everything else, and they can go back, and the exchanges just like, some of you guys, if you're in the commodities business, you're in Iowa, and you're in Wisconsin, all this milk, corn, wheat, they're all traded on an exchange. And there's a reason why, because the buyers and sellers, their trading information is retained there. So they know who did what when. And if some schmuck on Reddit said, go buy this stock, and then they check the options pit markets and they see this, and that's what they're going to do. And they're going to catch these guys. And where it's going to be a problem is it's not like if Tanner went out and did it. That's not a problem. Like it could be, it's a little squirrely.
He might buy 10 shares.
But if I did it, and if I'm a licensed securities professional and I'm out there on a social media site and I'm out there touting something, that's what they're going to find out. They're going to find out that somebody in the investment world knew what they were doing and went out there, and then this tidal wave tsunami took over of trading activity.
So
which is
would
not
that
good for the
potentially
market.
be? Would that even be like insider trading almost? Is that something that's
Well,
prosecutable?
it's not insider trading. Insider trading is not. This wouldn't be the case, because you would have to be insider trading means I'm on the inside of GameStop, and I know I have some material that's non-public information that I'm going to take advantage of. This was where they're going to have a problem. Like I said, if one of you guys was out there touting a stock and buying it, you're not licensed. You don't have to buy. When they find out, and they've already seen one guy that they have licensed, and then they're going to find out what was going on. They're going to find out what.
There's always a paper trail.
And the other problem, which is really important, which everybody needs to understand, and I was explaining this to my son. Okay, it's not like I use this as an example. If you're on StockX and you want to buy that fly ass pair of Air Jordans that are $200, and they're bid, they're offered at $205 and bid at $195, where you can buy and sell. It's not that simple. Stocks are priced at what they do in the future.
Right.
Stocks are not priced at what they do right now. And when stocks are priced that way, which is what GameStop and all, it takes fundamentals completely out of the picture. And that's not the way the stock exchange works. And that's not the way the markets work. Financial markets cannot work that way. That's why they have options, and they have time horizons on options. Stocks don't have a time horizon. So an option or a future, like, again, if you guys are involved in any commodities businesses, farmers use futures contracts to hedge all the time, and that's what it's for. It's for a fucking hedge, right? Yep. And that these are for, with time horizons. So that whole situation, stocks don't trade that way, and when they trade that way, it's an anomaly. It's not, it's based on some bullshit. A short squeeze is fine. That's a normal course of business. That stock trading, after people buying that stock from their Robinhood account, after hours is horse shit. Should never happen anyway. But Robinhood shouldn't be in the business. And this is where I may stray a little bit from what I said I wasn't going to talk about.
Please do.
Because again, eBay mentality in the stock market doesn't work. eBay is an agent for the buyer and the seller, and they collect a percentage of the transaction. Robinhood is opening up brokerage accounts, taking in money from people, and then settling their transactions. Now, what happened to Robinhood is that there's a T+2 settlement on stock transactions. This is what blockchain is supposed to eliminate. Blockchain is about matching transactions automatically and having no settlement. Things settle. It takes time to settle in the stock market. So those 2 days that are open on stock settlement, when you buy a stock, it takes 2 days for the transaction to clear. That money has to carry. So the GameStop, not to get real deep because we're going to go deep here, but the stock price moving and the settlement and the amount of money that Robinhood had, Robinhood couldn't clear their own fucking trades at the end of the day.
Damn.
They were going to get charged billions of dollars. So they should never be in the business of doing what they're doing, because their incentive is to trade as much as they can, but they can't. Nobody can. I mean, nobody could clear those. Nobody could. you could clear those transactions, but they were going to get charged like $2 billion in penalties because it exceeded the amount of money.
It was a serious liquidity issue, right? I mean, that was
Yeah.
when
Because of the price of the stocks. The stocks got they traded so much stock, and the value, it's the notional value of the transactions that so they should never be. That would be something that would never happen to, and it probably happened. I shouldn't say never, because it probably happened to E-Trade and Ameritrade, because these people, just because they have trillions of dollars of client money, they have to have company money that backs their transactions. And that money is not, imagine, you doing your job and you having to leave $50,000 in a bank account and never fucking touch it. I mean, never touch it.
Let's fucking go.
Is he?
Oh God, I'm so sorry.
Brian.
Don't invite me to your career day.
Yeah, you ate the shrimp and had Jack Daniels, and you got fucked up.
Yeah.
Your memory is so good, Tyler.